persistent negative forces, including lingering legacies of the crisis, that is the depression, and lower potential growth in many countries. That is from Oliver Branchard. Dr. Branchard is the chief economist at the IMF. The U.S. Was the lone bright spot in an otherwise gloomy report from major economies, with projected growth at 3.6% from 3.1%. That's for 2015. President Obama gave his State of the Union, and it was basically an economic address. He talked about adjusting tax rates for middle-class Americans, and at the same time increasing the rate for people making more than $500,000 a year. The IMF predicts that slowdown in China will draw more limited policy response, as Beijing will be more concerned about the rapid credit and investment growth. That, in fact, is what China should be concerned about, because that particular growth in itself was not across the entire Chinese economy. It was good for the middle class, but not for the working strata or for the peasantry, which China is a vast, vast country. Cuts were also projected for Brazil and India. India has fared much better under the new petroleum regime. Forecasters are rosier than the World Bank's projections last week. Global economy growth at 3% and 3.3% in 2016. Falling prices will give countries a chance to reform energy subsidies. Many countries do have to subsidize various types of energy, from cooking oil to petrol or gasoline. So that is part of it. Now let's just grab another part here in the petroleum sector. The Halliburton, that used to be the organization's a service company in Baker Hughes, to lay off thousands as the oil slumps. Now, Halliburton was the firm in the state of Texas that the former Vice President Cheney headed it. The global price has tumbled 60% since June, hitting a 5-year low. This is from Reuters. As growing production, and we expect our headcount adjustment to be in line with it. That's from the Halliburton Chief Officer, Jeffrey Miller. That was on an earnings call on Tuesday. The company, which employs more than 80,000 people, said it will cut 1,000 jobs in its operation in the Eastern Hemisphere in the fourth quarter. We cut, actually, the fourth quarter, Q4. We're now in Q1 2015. Baker Hughes, which is being acquired by the Halliburton enterprise in a near $35 billion deal, said earlier in the day it will lay off 7,000 workers. Shares of Halliburton Baker Hughes were down 2% in the morning trading. The job cuts, which comes days after industry leader Schammenberger said it would cut 9,000 jobs on the scoring the abrupt slowdown in drilling activity seen in the past 2 months. The U.S. land rig count fell by 250 rigs. That's about 15% over the past 60 days. That's according to the chief executive, David Lazar of Halliburton. Halliburton and Baker Hughes derive about a third of their revenue from North America. And we'll be monitoring Halliburton Baker Hughes to get an indication of where North America stands in this whole ball game as we continue to monitor these developments. Thus, this part of the economy has drastically changed. Halliburton has taken a $129 million restructuring charge that was in Q4 last year to temper the impact of anticipated activity decline. One of the things to remember here that when the price of crude oil started to fall, people did not talk about a flooring at that particular time. They are now. But on this particular broadcast, Mike, we were talking about what was needed to at least $50 a barrel. Because what we were looking at there was a floor of about $60. What normally happens in commodities, the fall is much more severe than models can predict at any given time. So now we're looking at somewhere between, we'll say, about $40 and $60. It's about 40. We'll check in a minute there as to where it is. But part of the problem is in the U.S., because of new hydraulic technology, is very costly to do this. So you will see falls in various sectors of North America. In Alberta, Canada, they will be hard hit, no doubt about it. In the Balkan areas of the Dakotas, 2 state areas in North America, and also in Ohio and in Pennsylvania. So we're going to see some bleeding continue there. Let's look at the beige book, and then we'll go to the rest of the forecast. This beige book is January 14th. We have not talked about it. It's prepared by the Federal Reserve Bank of San Francisco based on information collected before the 5th of January of 2015. Reports from the 12 Federal Reserve districts suggest that the national economy activity continues to expand during the reporting period of mid-November through late December, with most districts reporting modest or moderate pace of growth. In contrast, the Kansas City district reported only slight growth in December. However, most of their contacts, along with several other districts, expect somewhat faster growth over the coming months. The Dallas district indicated that growth slowed slightly during the reporting period, and that several contacts expressed concern about the lower price of oil, and we expect that to be apparent in that particular district. Consumer spending increased in most districts, with generally modest year-over-year gains in retail sales. Automobile sales showed modest to strong growth there. Automobiles have been one of the bright spots. And of course, the lessening of energy costs has prompted consumers to buy new automobiles. Many of those energy efficient, so it's a win-win situation. We can be a little non-economic at this point here. Nonetheless, the pace of growth and demand for non-financial services varied widely across districts and across sectors, but it appeared to be moderate on balance. Manufacturing activity expanded in most districts. Single-family residential real estate sales and construction were largely flat on balance across districts, while commercial real estate activity expanded. Demand for business and consumer credit grew. Credit quality improved a bit further overall. Agricultural conditions were mixed. Overall demand for energy-related products and services weakened somewhat, while the output of energy-related products increased. A typical supply and demand situation. Payrolls in a variety of sectors expanded moderately during the reporting period. Significant wage pressures were largely limited to workers with specialized technical skills. Prices increased slightly on balance in most districts. Consumer spending increased in most districts, with generally modest year-over-year gains in retail sales. Contacts reported to modest gains in Boston, in Dallas, and Philadelphia. In Cleveland districts, sales were solid in Atlanta. Modest sales growth exceed expectations in Chicago, met expectations in San Francisco. General merchandise retailers in the New York district indicated that sales were largely sluggish. Below plan for holiday season, the Kansas City district reported that retail sales were lower than a year earlier, with a few retail contacts noting a drop in sales of high-end products. In contrast, in Philadelphia and San Francisco reported that high-end merchandise continued to sell well. Automotive sales showed modest to strong growth on year-over-year basis in Philadelphia, Cleveland, and Dallas, and at the lower end of this range, Atlanta and Chicago at the higher end. Atlanta automobile dealers noted that lower gas prices quickly boosted purchase of larger vehicles, something we didn't want to see. However, some dealers in St. Louis district reported excess inventories of luxury cars. Kansas City reported that auto sales decreased during the reporting period, but remained higher than 12 months earlier. Automotive sales were robust in some areas of the San Francisco district. Travel and tourism picked up during the period in Boston, in New York, Atlanta, and San Francisco districts reported strong travel and tourism activity. Broadway theaters reported that attendance and revenues were up more than 10% from the same period in 2013. Tourism in Richmond and Kansas City districts was at or above seasonal levels. However, ski resorts in the Philadelphia district struggled to attract visitors in the modest, unseasonably warm climates. Non-financial services, the pace and demand of services for varied widely district and sector. Overall, non-financial service sector firms in Philadelphia and San Francisco districts continue to report modest growth. Most firms in Dallas area reported flat or higher demand. Activity of professional services firms in Minneapolis and Kansas City increased. However, contacts in Kansas City district expected the pace of growth to slow somewhat in the coming months. And Boston reported that some consulting and advertising firms grew rapidly. Demand for staffing services in the Dallas district was mixed, with contacts reporting strong increases in demand and others reporting slight increases. Freight volume in the Cleveland district increased during the reporting period, but contacts stated that freight transportation capacity constraints remain an issue. Freight volume in Atlanta, Kansas City, and Dallas held steady or increased in year-over-year basis. Manufacturing activity expanded in most districts. Philadelphia reported that manufacturing activity grew at a modest pace during the current reporting period, with slightly slowdown related to previous period. Reports regarding new orders and manufacturing in the Philadelphia district suggest some further slow moving forward. Manufacturing shipments and new orders grew modestly in Richmond. Contacts at factories in Cleveland reported demand increased a bit on balance. Manufacturing activity grew at a modest pace in Boston, New York, Chicago, and San Francisco. However, manufacturing in the Boston district indicated congestion at the West Coast ports had impeded its exports. Activity in the automotive sector in Chicago remained a source of strength for the region. Atlanta reported manufacturing activity strengthened overall. Kansas City and Minneapolis reported that manufacturing activity increased only slightly during the period. Real estate and construction, single-family residential estate sales and construction were largely flat on balance across districts. Sales declined somewhat year-over-year in Boston, Cleveland, Atlanta, Chicago, Minneapolis, Kansas City, and Dallas districts. In the pending district, December sales in some districts were notably up over December a year ago. However, builders of new homes in Philadelphia district reported weak traffic for prospective buyers and fewer signed contracts. In San Francisco reported overall housing sales picked up in December. Richmond reported modest increase in housing market pickup in December. Richmond reported a modest increase in housing market. Home prices increased modestly on balance in Boston, Philadelphia, Cleveland, Atlanta, Chicago, and Dallas districts. The Cleveland, Atlanta, and Chicago, Minneapolis, and Kansas City districts all reported slightly slower single-family residential construction activity. banking and finance, demand for business and consumer